Greg, I'm likely to have a real estate property sale by June 2026, which would free up $600K of cash. Can I use a 1031 into a portfolio of JWB sourced and managed properties? All right, so I re-highlighted all the properties in the portfolio generator.
Okay.
Right, I put in anonymous, since that was the first name on the Q&A section. I put in 600K over here, right? And now we go over here. We have all the properties that are cash flow positive, our internal rate of returns, initial total investments, positive net rental income. If we're going to choose them all, we're going to run out of money. So I guess, are we going to pick half of the properties here, GC?
Yeah. I mean, let's just go down the line. Let's follow that same exact criteria here. So maybe let's choose the top 12. There we go.
Here we go. All right. So now we come over here. Okay. We got 630,000.
Hey, what do we know?
Not too bad.
All right. So let's make sure we go through those criteria again. All right. We chose the assets that have the highest rate of return first. That's what guided us here. Next, we're looking at cash flow, both monthly, column L. Okay. Which we're over $200 a month positive cash flow for each of these, which we love. And we're also looking at over the full 10 years of the horizon. Are we positively cash flowing? Absolutely.
Positively we are.
The next is to make sure that it fits within the budget. And here we've got a total investment of 630,000. I don't remember. Was the number 600?
600K.
All right, 600. So what do we do here?
I think the not your average investor would say, okay, I'm going to have a bunch of positive cash flow to begin with. So I could probably add some of these at negative cash flow and still have overall positive cash flow.
We need to understand the relationship. When you have a ton of cash flow, most likely you are not maximizing your return on investment, because the way to maximize your return on investment is to put as little down as possible. If I have a lot of cash flow, I'm actually going to look at putting less down, which limits my cash flow a little bit. But that makes a ton of sense if my rate of return is higher by doing that. So this tool allows us to mix and match and see what the highest combination that we can possibly see here.
What I would add to that is we generally don't recommend a negative cash flow property unless you have passive income that is overcoming that negative cash flow, right? So since we are going to create all this positive cash flow here, we can go negative in one of these to increase our rate of return.
Absolutely.
So do we just go in kind of like the most expensive one and drop that down to 20%? Is that what we would do?
No, you know what I'm going to look at is the highest net rental income. And I'm going to go there. I'm going to put 20% down there because ultimately I would love for each property to be as close to cash flow positive as possible.
20%. Go back. We're getting closer.
We're getting closer. All right. Our out of pocket is less. Our net rental income is less. Our rate of return is still the highest. Now, it doesn't always jack up your rate of return significantly. Sometimes you see a couple of basis points that it'll bump up.
Okay, so let's do one of the Carolines. Here we go. 20%. So now we drop that Caroline and we are down to 606, right? So now we're like really, really in the ballpark.
So there you go. Anonymous, a 10-day.
Yeah.
We can do it. We can handle the 1031 exchange. What I would suggest is to give us a call. Let's talk about what your plan is. And then as it gets closer to when you actually put your property for sale, we're going to be in the loop. We're going to be talking with you. We're going to be identifying these assets with you. So you will have no problems as far as hitting your time deadlines.